Hi, everybody. Eddie here. Going to do a market update for next week. So we had a pretty interesting OPEX option expiration week. We made a few hammers right here, show some support. We bounced off that, hired off that 3,800, and we actually made a higher low above that level, and then we rally up into option expiration, right? So on Thursday, we gave that 21 EMA a retest. It failed, and then it came back down on Friday. We thought it was going to close back up into the close, but it actually stayed pretty weak. So next week, it might be a bit of a consolidation and then a break of either direction. As long as it's below the moving averages, it's still bearish, right? The one good sign is that it actually held this very important 3,800 level. It is back inside this uptrend, but temporary. It's still looking weak. We're above the this long trend line of this megaphone right here, and it's holding back above it. So as long as it makes a higher low for next week, there's a good chance that we'll come back up, retest this 4,000, maybe 4,020, and at this area, it will be either a rejection or a pullback, and then a breakout to 4,100 and fill some of these gaps up here, right? So the bullish scenario is that we will actually just break out, retest 4,000, 4,020, come back, retest the breakout of this 3960, 3950 area, and then continue higher. The bearish scenario, if Monday was a bad day, we come back, we break this low right here, come back and retest this 3,100 at the end of the week. And then at this level, if it makes another hold right here and start bouncing off this level, then that's actually a stronger buy, right? So if I actually come back down, retest this and held, and then say have another base or reversal hammer like it did over here, then the breakout, then it'll be much stronger movement. Or if we just come back, retest 3,900, hold 3,900. We can also go for the 4,000, 4025, and then 4,100. If this time you can break above 4,200, it's likely that we're just going to continue higher, right? We're moving into stronger seasonality now. Usually late March, and April is a very good. April's a very good month for stocks, so we could see somewhat of a consolidation and a breakout afterwards. So that's pretty well the game plan for the next few weeks. This is a very key level to hold. Is that 3,800? This mega base right here. I would like to see it above 3,850 for next week. So if we can hold 3,850, then it's a more likely scenario that we're actually going to go higher, right? If we break above this 3,980 level, right up here, if you can break above 3,980, hit 4,000, hit 4,025, then the bull scenario will be like somewhat like come up, retest, and then the breakout to go higher, right? So if this happens, it's a very strong move, and we likely will make a higher high. So we could come all the way up to retest this time, right? But we'll have to figure out in the next few weeks or so. So if you measure this move, it actually came back a little bit too far. It came back a little bit too far. So the next level is actually just going to retest this high right here to see if you can break through 4,200. So that 4,200 is a very important level. If you can break through this 4,200, then we can make a higher high. Right. Let's take a look at the Qs. So the Qs are much stronger than SP 500 in the past week. So it does look like a lot of money rotating once again. Probably mainly because the banks are dragging the index down on S&P 500. So QQQ is actually doing much better than S&P 500, the Nasdaq, because there's no banks in the Nasdaq. So it's mostly tech companies. So it's performing much better versus the S&P 500, which is pretty heavy with the financials in that index. So without the financials, you can see the performance is much better, and it's almost making a higher high off here. So if you measure this move, It bounced right off the 50% on the Fibonacci ruler, right? So with that bounce, if this were to continue higher into seasonality of April, you can likely see that we probably want to come up and retest somewhere along right here. So it does look like it's around that 335, 340 region. That's going to be the next level to hit. So that will be your target for the next wave up if you can break this high right here. If it breaks this high right here, likely we're going to test this high right over here. So that would be the bullish scenario. The bear scenario is if we don't hit this, we actually make the lower high and then we come back down, make a lower low, and then give this another retest down here before going higher. All right. So how big the Silicon Valley bank going under will have a ripple effect or not. We won't know that till probably in a few more weeks. So as far as right now, I probably stay away from trading banks. I'm just going to trade whoever's since Qs are performing much better than SP 500. I would stick with technology stocks for trades. I think momentum stocks are picking up some steam. So that would be the sector I would go in where price action is. So if you look at Bitcoin, Bitcoin broke above 25,000. So it's heading to 30,000 now. So risk money is back on the table. You can see right here, you came back, retested 200 and it bounced hard off that 200. That's a pretty strong statement, right? So it's definitely going to try and retest this 30,000 level next, right? 30,000 to 3,200. This is the supply zone right here. This is a strong supply zone from previously. So this would be your supply zone right here. So it's going to come up and retest this. If you can break through here, the next supply zone is way up at 40,000, right? So Bitcoin stocks and risky growth names, when they pick up momentum, they fly. So you can stay in high momentum stocks until they break the trend, right? So if you're a momentum trader, then definitely these are the type of stocks you want to trade in the high growth sector, and then just ride it till it breaks. Right. So let's take a look at IWM. So IWM is very weak right now because they have a lot of regional banks, right? In the Russell 2000. So it's performing super weak. It's trying to hold this major demand zone right here. This is the area where it broke out from COVID. So it really needs to hold this level. It needs to consolidate and then break back out and give this supply zone up here a try. All right. So right now it's within the zone. See what happens when it's in the low zone. In the low zone, you could probably try to, if you trade ETFs or indexes or whatever, you can probably try to play a bounce play right here and just set your stop at the lows, right? So you can play it that way if you wanted to, but at the moment it's fairly weak. We broke all the moving averages again, just in the consolidation range right now. So it's somewhat like here, right? So it's either going to consolidate and then we're going to get a flush down. The next flush down is actually pretty low, so all the way down to COVID lows. Or we bounce off here and then we're going to give this another try. All right. So let's take a look at the VIX. The VIX gave a big push up into the 30 area and came back down, starting to calm back down around here. So if the VIX actually starts dropping back below 20, that's a good sign. That means that volatility is dropping and the stock should be moving back up again. Now, if it holds above 25 and it's trending up here and then it breaks out, then we could get like another flush down in the indexes and the VIX could go back up to this 35-40 region right up here. So every single time it's the volatility breaks up to here, it tends to come back down. So hopefully sometime the VIX will drop back down to below 20 and then the markets continue to go back up again. And let's take a look at some stocks. So Apple's in the upper range of this channel right here. So it's performing pretty well compared to a few of the other tech names. It's staying in the upper range. It's still stacked above all the moving averages. You have somewhat of an inverse head and shoulder pattern right here. So if you don't see that, it is right here, head, and there's your neckline up here, right? So if you can break out, break above that 160, it's going to give the highs right here, another retest right here, the zone. So that's your target. If it breaks out, if it doesn't, it's going to come back down to retest the lower end of the channel. AMD, it based over here at 200, got a squeeze going on right here and then broken out. I was saying that you could test this 100 level if it breaks out. So that's where it's about to head to. And then if it breaks over there, 120, right? So down here was the opportunity to buy it cheap. I never got a chance to get any shares. All I did was got some premium off the puts that I sold. It's up a little high right now, so I would like a pullback, give this 85 zone a retest, and then continue higher, right? So if it comes back to 85, that's where I want to buy it, and then make a higher low, and then go for the kill right up there, right? So to play this, if you really want to play it, right, you could continue to sell puts at this support zone right here, see if you can grab some shares. If not, you can collect some premium because it is extended right here. It is near resistance, which is up here around that 100, 105 region. So it's likely you could hit here and then come back down, right, for a retest, right? So if you want to measure that move, right, so you can see right here, 100% is around that 105 level. So once you hit that level, you want to go for a retracement back to retest the breakout area, which is right over here, around 90. And that's the area where it could bounce and then continue higher if this market was to go higher. Right, Amazon, it had a base right here being built and then a big breakout, and now it's consolidating above this breakout. So if it doesn't break below this Friday's lows right here, chances are it can continue higher and then give this 200 period moving average another test, and hopefully it can break out of it this time. If it doesn't come back down, is a pretty weak sign still, right? So it is in a very well-defined downtrend, but it is making a higher low right here. You're looking to make a higher high, and a break above this should get you that higher high. To play this, I got shares. I also sold some premium on a strangle on this, and I also sold some extra puts just to grab some more premium while this thing is basting. I don't really like to hold too much stock when they're still in the downtrend. So that's the way I'm going to play it for now and just collect premium while I wait for the index in the stocks to go back up. Meta broke out of this what was formerly a wedge, so it did not close this gap. It's breaking above it. It's trending higher, so I'm looking forward to pull back, see if it can hold 190. If it holds 190, we're gonna go test that 230 next, right? So it's still fairly cheap down here. So I mean, if you want to grab some shares longer term, just sell some at the money puts, grab the shares. If it doesn't take the shares, you're at least going to collect a very good premium at this point. So I would put like one layer here, maybe a layer on the gap fill, and then if things go bad, we can get another layer down here around 130 where that gap was. So that would be the areas that I would trench down and then leave some money. Like I would allocate only 50% and then leave some money as it continues higher. If it continues higher, breaking above 230, that's where you're at because there's a gap right here at 250, and then it's a long way from gap fill, which is at 3 something. So if we actually can push all the way up to gap fill, that's a pretty significant return. So I mean, it's not a bad idea to grab some shares, even though they're not growing right now, but they're investing a lot in their AI. And if they ban TikTok, right? If they ban TikTok, the beneficiary will be Facebook. So if that happens, you can expect this thing to really rally hard. So it's high risk, high reward right now. So if you got an appetite for risk, definitely you can allocate maybe like a 1/5 precision or even a quarter precision in this right now, and then just trench into it to allocate a maximum of 50% to about gap fill area, and then as you start continuing higher, that's when you deploy the other 50%. Okay, Google is giving that 200 moving average another test. It broken out, came back and closed below it, so that's a fail. It could come back, pull back into that 95, 96 area and then continue higher, right? So right now it's looking fairly good. It's a nice base here. Either going to base and break out or it's going to base and break down. So if the index is going to break out, likely Google's going to break out. If the index is going to break down, likely Google's going to break down. So the way I've been playing this is I've been collecting premium every single month, and I just keep collecting premium until we break out and trending above the 200 period moving average and showing signs that this is the bottom, which is higher highs, higher lows. If that's the case, then I am going to start deploying some cash into this stock and then ride it for a long term, right? Because it is trading cheap right now. It's about 50% discount almost. Not quite, but it was at 152. It's trading at 100, so you get like a $50 discount on this thing right now. So that's a pretty significant discount for a stock like Google, because Google's still a pretty high growth company, and they are one of the main AI players as well. So longer term, Google is definitely a stock you want to hold for like almost forever type of stock. So you can always start allocating into the stock while it's being cheap down here. Microsoft. So Microsoft got that big rally. We're now a higher high. We're into this gap right here that I talked about. It didn't quite fill the gap just yet, so there's still room to fill the gap. I like to see a pullback, back down, maybe a retest around that 270 area, and then I continue higher into the 300 area, right? So I did sell puts on this last week. I had it for like 3 days. It had a big pop. I just collected the premium. Probably should have bought the stock, but anyway, I'm still going to do the same thing. Just keep selling puts until I get my stock. All right, until the market bottoms, and that's the only way I would start allocating more money into the longer term positions. Once the market bottoms, I can start deploying some leap options for longer term, as well as continue to sell puts and buy some shares as well, and do some fancy work with some options to maximize the returns once this thing bottoms out. Netflix. So Netflix, it dropped below this channel. It's trying to get back above it. It is still doing fairly well, but I'd like to see this thing to break back above the 50-period moving average, or maybe around 350, and then break above 400. Once it breaks above 400, then there's a lot of run room up, right? You can come back up to around that 500 region. Once 400 is broken through, that is the key resistance level. So right now there's more risk than reward because it is in the upper end of this area. So it is around 300 right now. 400 is right there. You could trade it, but they do have earnings coming up. So earnings always a risk, but you could always sell premium at cheap prices and see if you can grab some shares if you're interested in this stock. So this is one of the stocks I don't trade much of out of the fangs, because I never like Netflix. They're not profitable compared to some of the other stocks. So I much prefer like the Apples, the Amazons, and the Googles, right? Over something like Netflix. NVDA on fire. NVIDIA is still it's a big AI play. And this is a stock where everybody's pouring money into for AI. So it is at the top right here. This is it filled the gap. It is at the supply zone right now. Might be a good short opportunity, but I wouldn't short this because it has so much momentum and it's way extended. Like 200 period moving average is way down here. Price is way up there. 50 is over here. So chances are it can have a significant pullback once this momentum's done, probably to around 200, 200 to 210 area, and then possibly base right here before the next breakout. So you can see right here, this is one of those stocks that picks up huge momentum and then falls like a rock, right? So this could be another one of those scenarios where you just big giant pump and then the dump after. So be very careful buying it up here. If you're holding it, just keep a stop like probably below the 21 period moving average. If you want to ride this longer. Other than that, I would take profits up here. This the only piece of run room left out of this wave is possibly 290, possibly, but it's way extended right now. It needs to pull back and then continue higher if it does that. Tesla. So Tesla is still holding strong at this area. So I talk about this support region around that 150, 160 zone. It did bounce off that 163. So slightly above that is around this low right here. So it is consolidating over here. You want to see it break back above, probably around break back above 200. You'll give this 220 to up to 250 a try if you can break above the 200-day period moving average. So this 220 area is a very strong resistance area. So that's where the 200 is, also the previous peak. So if you can break through here, it got some pretty good run room. So what I did was I sold some puts at 150, but it looks like you can go run up to 280 to 300 area. And if it gets extended, 360. That's a lot of run room, right? So but right now it's still below the moving averages. You want to see this to break above like at least that 190 zone, 190, 200. It needs to go above the 200 period moving average right here, 220, to really have this kill the shorts and then just pick up a mass short squeeze up there. You look over here, you see that this is a huge supply area, this zone up here, huge supply area. So it's going to be a very strong resistance. So the bearish scenario would be it comes down, it retests its zone and drop, right? The bullish scenario is that it actually breaks out and then come back, breaks out, come back, retest, and then the big run. So like I said, we're heading to a little bit stronger seasonality. So if like the Silicon Valley Bank does not trigger somewhat of a financial breakdown, then likely a lot of these tech names is about ready to take off. So that would be what you'll be looking at for the next couple weeks. Just set your alerts up here. If it breaks above here, just go for it. Go for the buy. If it breaks below that 150, it's done because there's a gap right here that needs to be filled, right? So it does need to come back and fill the gap. Likely scenario fills the gap and then a huge bounce. That would be the ideal scenario, is to fill this gap and then a huge bounce and break above here. So, and that is the 0.618 area. So if it gets rejected higher right here next week, we get a down week, it's coming down, it's going to fill this gap next week if it does get rejected. All right. So that's pretty much it for next week. And as for the aggro, the aggro's been doing fairly well on these big trend days. So if you want to trade this using the algo, let's see if this goes up. Right. So we have the algos down here. If you take a look on this big up day right here, you have a very nice down move, very nice up move right here. That would be a day maker right there. If you follow this shorter time frames, this chop could have eat you up a little bit right here. But still, even in this chop, you got some nice momentum moves like right here and right here. And you get the big moves over here that you could have caught, right? These are your money makers right here. So if you understand how to use the algo correctly, with combined with some technical analysis as well on key levels that we talk about every morning, you have a pretty strong system to really ride these big trends when that happens. Right. So the key here is not to follow the algo blindly, but to trade it according to the levels that I post every single day in the market update, and then combine that with some key technical analysis that we use for trading, and you have yourself a very high probability scenario of trading the trends right here. Anyways, if you're interested in the algo, you do get it for free with our Discord membership. You can sign that up at leecapitaltrading.com. .com. You description below, and if you guys are interested for more videos, just like, subscribe, hit that bell icon, and then I'll see you guys next week.